Mark, let's talk about the markets in 3 minutes and start with the boost to stocks that we're seeing from the China story, from this stimulus of some variety coming through from the Politburo. I mean, what sets apart stimulus that is greeted by big enthusiasm, as we're seeing today, and stimulus that just sort of falls on deaf ears in a China context? Because actually, I was hearing quite sceptical commentary yesterday about how big a deal this was, and yet we see it boost Chinese stocks.
That's a great question, Anna, and I think probably the simplest thing is positioning and consensus expectations out there. I think that, particularly in US investors, they're pretty cynical. There's pretty low expectations. I'm not sure those expectations have been beat much, but there's a lot of bearishness, and this really caught a market just slightly offside, particularly in the big names in the Golden Dragon Index in the US. And it's important to remember the timing context here. This came out after the market closed in Asia, and the market in Asia kind of shrugged. They didn't think this was a particularly big story. That was the kind of idea in the European session. We went into US session. It was after the cash market closed in Asia, of course, this came out. We went to the US session and they got very, very excited. And that kind of fed through to Asia. But even the morning kind of views from most people I spoke to was, yeah, sure, we expect Chinese stocks to have a great day today, but how long can it last? And there was a general kind of morning of, we're not going to run with this story. But what is interesting is that post-lunch, we've actually taken it a whole other leg higher. It's kind of as if Asia's taken the morning to assess it and gone, you know what? Maybe we should run with this story after all.
Yeah, that's really interesting. And maybe you apply the same to commodities markets. I know we'll talk more about the soft commodity side of things a little bit later in the programme, Mark, and that's much more complicated. But oil prices did seem to get a boost from this same narrative.
Absolutely. Well, look, China's the world's biggest commodity importer. So if suddenly we're going to change the narrative in China, if suddenly we're going to believe that stimulus measures are going to work. Now, remember, we've had ongoing drip of stimulus measures for the last couple of years, and they've never really changed the narrative for long. There was a brief window at the start of November where it really looked like it was game-changing, but that was mixed up with the ending of COVID-0, and so it was the kind of reopening bang as well. But otherwise, they've generally disappointed. However, if the market is going to run within the equity side, it makes sense to run with it on the FX side and the commodity side as well. And that is what's really driving commodities today, along with the kind of soft side, which is about kind of weather and the various measures being taken by governments to limit exports.
Yeah, and then a little word on the growth, our growth expectations right now. We saw really bad data, didn't we, on the European economies yesterday in terms of those PMI numbers. Bad in the UK, really bad coming through from certain economies, particularly German manufacturing, really catching our eye around this time yesterday. Then the US data, and some focused on the weakness, but some saying actually it wasn't all that bad if you look at the aggregate number. I mean, what's your takeaway from where we are on the growth story after that data?
I think US mixed, not in recession yet. Recession is still a story for a few months away, probably early fourth quarter is kind of my take at the moment. But I am wondering whether Europe might already be going into recession. I think the fact is France is doing terribly on services. The whole region is doing terribly on manufacturing, and particularly Germany as the manufacturing headquarters, and that's a problem.